Today is February 27th, and there's a lot happening at once. $8.72 billion in Bitcoin and Ethereum options are expiring today, for instance. That would be February's largest derivatives event. And that alone, explains most of what you're seeing in price today. But there are 4 other macro forces running underneath all of it that I want to walk you through today. On the one hand, we're going to cover what the Fed is doing. We're also going to get into what's happening in Asian markets because it's super interesting and points to the change going on in the world in general. Then we're going to get into what Iran has to do with any of this and why tariffs are still an open variable that may end up impacting the market more positively than not. And then lastly, we're going to get into what institutions are actually doing in the middle of all this chaos and noise, because Morgan Stanley made an announcement this week that I think got buried. And the ETF flows data tell us a very specific bullish story. And then at the end, we're going to connect all the dots and I'm going to tell you what I believe and where I think the market is going next. Hi, I'm Jess, and without further ado, let's get into it. So let's talk about these options expiring today because they're not a small amount. We're looking at $8.72 billion worth of Bitcoin and Ethereum's options expiring today. That's February's largest single derivative event. What does that actually mean? Now, a simple way to think about this is in terms of a reservation at a restaurant, for instance. When you make a reservation, you're essentially making a bet, right? Weeks or months in advance that you would want a table at a certain price at a certain restaurant. Well, today is the day all those reservations that you had made, right, previously either get honored or expire worthlessly at a loss. And when billions of dollars in reservations, think of it that way, expire at the same time, the people who made those bets have to adjust their positions. Some are buying, some are selling, and some are doing both simultaneously. And all of that activity creates price turbulence, which is exactly what we're seeing right now. So this is what analysts are calling max pain, a max pain event, meaning the price gravitates towards the level where the most options contracts expire worthlessly, causing the most financial pain to the most people holding those contracts. And it's one of those mechanics that moves markets without ever making the news in a way people understand. However, the key takeaway is that today's volatility, this is what I want you to grasp and understand, isn't just random chaos. It has a structural explanation and it's temporary. And we'll come back to what happens after the dust settles. But first, let me give you the full picture of what's shaping this market today. There are 4 macro stories, or events running simultaneously right now that are all creating pressure on Bitcoin. So let's go through them quickly and systematically. The first is the Fed is not cutting rates anytime soon. As of this morning, futures markets are pricing just a 9.8% chance of a rate cut in March next month. So to put that into context for you, a week ago, that was 18.4%. And a month ago, it was 26.5%. So the odds of a near-term relief from the Fed, have been cut in half over the past month. Most investors now expect no rate cuts until June, and that timing may not be coincidental because June is when the new Fed chair, Kevin Warsh, is expected to take over from Jerome Powell. So one might ask, maybe you're asking, why does this matter for crypto? Because when the cost of money stays high, investors tend to stay in the safe assets, such as cash, even though we know they're not really safe, bonds and gold, and pull back from the riskier ones. And right now, for now, Bitcoin is still being treated like a risk asset, even though its fundamentals suggest otherwise. We'll get into that here in a moment. But so what is the second event or story you could say going on in the markets today in the world today that may be affecting Bitcoin and the crypto market in general's price? Well, this one's actually very interesting to me because it points to the larger sort of ricocheting cause and effect rolling through the market because of the changing order in the monetary system we see going on in the world right now. And that is that Asian markets are on a historic run and it's pulling capital away from the US. Asian equities are on track for their best February since 1998, and South Korean tech stocks are up roughly 20% this month alone. And the MSCI Asia Pacific Index is set to outperform the S&P 500 for a third consecutive month. When capital rotates towards outperforming regions, it comes from somewhere. And right now, some of it is coming from US risk assets, including crypto. So this isn't a Bitcoin specific story. It's a capital flows story. And capital flows are everything in markets. And okay, the third story or force moving in the world today that are affecting markets can be seen and of course understood through the Iran tension, pushing oil prices higher. We see Brent crude climbed roughly 6% this week to above $70 per barrel. And this is on the back, okay, or as a consequence of the US military build out in the Middle East, of course. And this matters for crypto because rising oil prices tend to fuel inflation concerns. I spoke about this earlier this week. I said it was a risk, and now we see it happening, which in turn, okay, these rising oil prices pushes the Fed further away, as I also said could happen, from cutting rates, which creates the exact environment we just described. Geopolitical risk is a real headwind for anything classified as a risk on asset. And as long as Bitcoin trades like a risk on asset, it's going to feel this pressure as it is right now. And then, okay, what is the fourth force moving the market, affecting the market today? Well, it has to do with tariff uncertainty remaining unresolved. We know we started out the week. I won't get into it in great detail here because I did cover it extensively on Monday and I think even Tuesday. So feel free to go watch those videos. But I talked about how the Supreme Court ruled Trump's Liberation Day tariffs, okay, unconstitutional, or in many words, all right. They said he didn't have this power and that actually he overstepped his powers by enacting these tariffs on emergency measures pretenses. However, we know that the White House immediately after moved to reimpose them through other mechanics. Either way, we have a scenario, a setup right now where the uncertainty, okay, the fear in the market has not gone away. It just changed forms. Tariffs simply went from being justified under one legal clause, I forget the name, into another, okay? And the crucial part to understand here is that tariff uncertainty equals business investment hesitation. And macro slowdown fears equals a flight to safety, right? Because people don't want to lose their money. So if the market is scary or uncertain or shaky, they're going to just pull all their money out. Think about what you would do, right? You'd go withdraw your money from anywhere that's risky. You'd want to cash out. You'd want to have cash on hand. Well, that's what investors are doing at scale right now. But all right, how do all four of these events and forces connect? All of them right now are pointing in the same direction in the short term. But now let's talk about what the institutions are doing while all of this is happening. What are the largest financial institutions doing? The biggest investors doing? So, okay, this is where it gets interesting because while all of the macro noise, okay, the real big events in the world are generating a lot of uncertainty and fear, noise, you can put it, institutions, okay, not private investors. We're talking about huge institutions, right? Like the BlackRocks of the world. Well, they're not running away, okay? They're building. And this tells us something about where they see the future of finance going. This week, we hear from Morgan Stanley. Okay, they confirmed they're building their own Bitcoin custody, trading, yield, and lending infrastructure in-house from scratch. Now, maybe you're thinking, so what? Banks have been offering crypto ETFs access for a while. Well, This is why this is different. An ETF is like buying shares in a railroad company. You get exposure to the railroad, right? But you don't get to own any track, okay? You don't own the train. So if the company goes under, your shares go to zero. What Morgan Stanley is doing is buying the actual tract, okay, for the train. Direct custody means they hold the private keys to their client's Bitcoin. So they are building the technical infrastructure. That is a fundamentally different level of institutional commitment. It means they know Bitcoin is the future. And with the Clarity Act still up in the air, okay, we know they have until March 1st to get it done. And we know that the central banks have been fighting against crypto exchanges, crypto platforms, primarily because they offer their customers yield on their stablecoins. And essentially, it's much more than any central bank is currently offering their clients. So I predicted earlier, I think it was a couple weeks ago, I predicted earlier this month, that I could foresee a partnership happening between the central banks and the crypto exchanges because crypto is the future, Web3 is the future, digital cash is the future. And central banks know that. They know that they're working with a flawed currency that is being debased, is inflationary, is losing its value, and that many nations in the world, right, through the BRICS alliance, are looking to replace using the US dollar because it comes with a lot of control from the US. And these other nations don't like that. Even the American people don't like that their US dollars are losing value, right? Groceries have gone up, gas has gone up, everything's going up, but the US dollar in itself is losing its value. I think it's lost, the last statistic I saw was the US dollar, has lost 25% of its purchasing power since COVID. That's a lot. And the problem isn't going away because the core problem still exists. And that is that the Fed has the ability to print money at will. So anyway, what I'm getting to is that because we know the Clarity Act is up in the air right now, we know there's a real battle between the traditional banks and Web3 financial institutions such as crypto exchanges, because we know they're battling it out right now. Of course, we're seeing a scenario where Morgan Stanley is just saying, hey, let's just build out crypto infrastructure ourselves. Let's offer this yield to our customers ourselves. So either way, okay, I still believe a partnership is underway, some sort of partnership between traditional banks and crypto exchanges. But in the meantime, of course, we're seeing other solutions roll out, such as what Morgan Stanley is demoing for us. I think this is one of many in the first dominoes to take off. We're going to see many more traditional banks offering and building out their own crypto infrastructure. So this is, for me, the first of many more to come. And what's interesting is that Morgan Stanley isn't, we know, obviously a crypto native firm making a bet. This is one of the oldest, most risk-averse wealth management institutions on the planet, one that manages trillions of dollars in client assets, saying, we believe in this enough to build the infrastructure ourselves. And that's not a speculative statement. This is an infrastructure decision. And infrastructure decisions don't get reversed easily. As I was saying, I can see a lot more of this coming soon. And if we take a look at the ETF numbers, well, they tell us the same story. So I know the market is still down today, and a lot of what I'm bringing you is not necessarily good news, but it is. If we connect all the dots and we can see how things play out in the long term, we can see how change and this revolution towards Web3 finance, okay, is still underway. And that's exciting to me. The total Bitcoin ETF assets under management right now stand at $123.52 billion. And BlackRock's IBIT ETF alone holds roughly $70.6 billion. In the first week of this year, during a period of declining prices, more than $1.2 billion in fresh capital flowed into Bitcoin ETFs. And today, even though we see a fear and greed index of 13, which is high, and even though we have a scenario where $8.72 billion in options are expiring today, with macro headwinds running in every direction, nevertheless, Bitcoin ETFs are still pulling in, $254 million in new value, in new inflows. Meanwhile, Ethereum ETFs captured just $6.6 million. The institutional conviction right now is Bitcoin dominant despite the price, and it's not wavering. And then, okay, to add to all of this, we hear from Strategy, formerly MicroStrategy, and their pivot. What do I mean by that? Well, Strategy just made a notable shift. They're moving away from promoting corporate Bitcoin balance sheet adoption and pivoting to marketing STRC as their core funding vehicle for ongoing Bitcoin accumulation. Benchmark analysts are calling this the primary engine of their model going forward. And what this tells you is that even the most Bitcoin maximalist corporate entity in the world is evolving how they accumulate, not whether they accumulate, just how. And then we hear Mara is also making an AI pivot. We know that Mara is one of the largest Bitcoin miners in the world, who just jumped 17% in a day after announcing a deal with Starwood Capital to convert US mining facilities into AI data centers. This is a theme worth watching. Bitcoin miners who already operate massive energy infrastructure are finding the same physical infrastructure required to mine Bitcoin is also perfectly suited for AI compute. It's a structural convergence that could redefine what a Bitcoin company looks like over the next few years. But okay, let us step back for a second and look at the full big picture of what's going on. On the one hand, we have a scenario where Bitcoin, yes, is down 50% from its all-time high. And yes, the fear and greed index is at a 13, which means extreme fear. And yes, retail is scared and capital is rotating to Asia and gold. However, on the other hand, we have a scenario where Morgan Stanley, the first of many traditional finance institutions, I believe, building its own Bitcoin infrastructure from scratch. And ETFs we see have absorbed $254 million in fresh inflows today. And Strategy is engineering new funding vehicles, despite all the fear in the market, specifically to keep buying more Bitcoin. So what does this tell you? And we hear from Bitwise's research analyst saying something sharp about this recently, essentially saying that you can tell it's a crypto winter by how investors react to good news, essentially being that they don't. Every positive institutional story this week barely moved the price, which, okay, in this weird, odd, positive way, points and tells us that we are in a classic scenario of a bottom environment, a crypto winter, which is not a call to act on, just a useful thing to notice. Because if things are so down and we are in a crypto winter, well, what do you think follows? Spring and summer. And though, yes, Bitcoin is still being treated like tech stock / high risk asset, and yes, institutions still need to be further educated on what Bitcoin is, okay? It's programmable scarcity and immutability and resistance to any control. Bitcoin is truly the money of the people, borderless, okay? Anyone in the world can use it. And if there's a crisis, they can literally grab their ledger, their phone, wherever their Bitcoin is, okay? And they can just move all their money with them, okay? That's something you cannot do with gold. And as more institutional investors and investors alike, more people realize this, Bitcoin's price will become more and more stable. And we're already seeing, I believe, the first of this with the simple fact that ETF inflows continue to go up and have gone up in value today even, despite Bitcoin's low price. So this lack of education, okay, explains the gap between what Bitcoin is and how it's being treated. And that gap has a few identifiable resolution points. The Fed is expected to move in June when Kevin Warsh takes over from Powell. And the midterms are putting pressure on the administration to support market conditions in the back half of the year. Historically, we know that midterms have been correlated with liquidity in the market, a more liquid market, meaning we can expect the Fed and the government to do something to stimulate this market, which will affect crypto and Bitcoin markets alike. So the point is, ultimately, okay, we don't know how things are going to play out in the next few months. And I'm not pretending to say I know. I'm simply pointing out correlations, historical tendencies, and my observations of how things are evolving in the market. And the key takeaway to take is that the conditions currently suppressing price in this market aren't permanent, okay? They have solutions. And it looks like many of those solutions are around the corner, including tariff refunds. So yes, we don't know when these resolutions are coming, but what we do know is that the infrastructure is being built by the people who don't build things on speculation. They have whole teams and board leaders, and they make very meticulous decisions because they're managing other people's money. And we see that capital is already positioned, and the macro headwinds have names and timelines and deadlines, which is very different from the 2022 cycle where the floor kept moving. So pay attention to this system, not the sentiment. Don't be tossed around and emotional just because of what you see going on in the news. Some of it is warranted, but you really have to connect all the dots, which is the value in staying plugged in, whether it's at my channel, tuning into my channel, which you know I appreciate, but it's also just educating yourself. I literally listen to the news and top financial podcasts from Moonshots to the All In podcast and other top financial leaders literally all day long, because I'm always just looking to connect dots, connect dots, connect dots. And if you can at least follow my channel, where I do my very best to simplify things for you, whether you've been in crypto for a long time or are new, that is your edge. That is our edge. Because then when things start to turn, okay, and the weather, so to speak, tells you that good times are coming, you'll be ready because you will know how everything is connecting. Anyway, that's a wrap for today's video. If you gained value, if it helped you in any way, let me know in the comments section. Let me know what other questions you have or topics you'd like me to cover, and then subscribe if you haven't already. I know these are down days in the crypto market, but there will be sunny days ahead, and all we have to do is keep going and not mess up. And don't sell your Bitcoin, though this is not financial advice. I love you guys so much, and I'll catch you guys here on Monday. Take care.